Hello, everybody. John here on this week's edition of the Deep Dive, and I'm here by myself. So Drew's not with me, so who knows what I'll be talking about? I'm sure we'll figure things out. I wanted to actually let you guys a little bit into my kitchen so you can see a little bit behind the scenes of the things that I'm working on and the things I'm talking about. And I wanted to talk about a high-level thing that here we are, the first part of February. It's going through the first month of the year, and we see the stock market continuing to move in a positive fashion and wanted to walk through a little bit as far as on how we view the market and what are things that we look at on a regular basis. And then how do you determine should I be invested more or not? And I think it's really critical to make sure that because there's so much noise out there and there's so many things to look at that are happening in the world. And so you may say, hey, it's looking like there's a lot of bad things happening, or we hear the Federal Reserve is saying this, or inflation has done that, or we heard China and Taiwan had a new election and a conservative kind of went in. And so it's concerned that China is going to take a more aggressive action. Or we had an issue over in Lebanon and over in Jordan where a drone got through and in some way went to a U.S. military base and killed 3 service members, and a horrible thing. And so that's going to cause some real negativity in the stock market. Or we had the issue over in Israel back in October the 7th. That was going to cause the market just to go down. Or we had this presidential election. Well, at the end of the day, markets move up or down based upon earnings. And what are the news events that we see happening, or black swan events that happen? How do those actually affect earnings here in the short term, intermediate term, and long term? And what I want to walk through today is what we do to actually help us determine how aggressive we should be, big picture, and how much risk we should take off the table. And so there's always rebalancing going on inside portfolios. Or if you have a large amount of money coming out from retirement, going into an IRA and sitting in cash, when should you invest it? Should you always fully deploy it? And so what we have here is at the very top, you see the S&P 500, so we're looking at here. And you see the top up here is showing the price of the S&P 500 over time. I did bring us back here all the way to the beginning of 2000. Is where we're at right here is February of 2000. Is where this starts to turn red, going all the way through today. And you see how the price went down, it went back up, went down back in 2022, went up through 2023, and so forth. Here on the bottom is a little bit of math. And what you see here is really momentum. So whenever the line is moving in an upward fashion, that means momentum is going up or momentum is going down. This right here is what's called a relative strength indicator. And then we take it, we add some of our own personal math or logarithms or inputs in here to give us signals that we should be looking at as far as how things are moving overall in the marketplace. We then have different lines at the top that tell us different things. But at the end of it all, whenever I zoom in a little bit here, you see this little plus sign. Anytime you see a plus sign, that is an indicator to us to either buy or sell. Then you see the next one, buy, and then sell, and then buy, and then sell. And so just a back and forth. And what we're looking for is broad-based market movements. Now, we apply this to 5 different indices. And you see them up here in the green boxes. These are going to be green or yellow or red, which means go, which is bullish, or cautious, or let's go red, which means sell. So we have the S&P 500, the Dow Jones, the NASDAQ, the New York Exchange, and also the Russell 2000 or small cap index. So if these start turning colors, that's an indicator that we need to consider take a little bit less risk. Right now, they're all green and they're all in a positive fashion. Whenever I look back in time, the question is, how do we invest now? And so let's kind of go back and look in time, and let's go back here to 2000. So right about in the fall of 2019, we saw that there was a virus that started spreading over in China. It went into Italy toward the end of the year. We get to January, it really started picking up steam. Then we get to February. And I was out in a conference in Salt Lake City on risk arbitrage, and they had the director of the CDC for the western half of the United States come in first week in February and said, hey, this virus is growing and there's going to be some serious action taking. So that's all right about this time here. The market started moving down at this point. We still have not gotten to the low. We had a sell indicator rip off right here. Now, we didn't have this. This is developed continuously. Our math continues to develop as we get more evidence. And so what we have today is totally different than what we had 3.5, 4 years ago. But when you start to look at the accuracy, you start to see some patterns. We're never going to be able to sell at the ultimate high, and we're never able to buy at the ultimate low. We're looking for larger patterns and trends to give us an idea where things are at. And so, but we saw a sell signal here, and then basically the entire time was red is out of the market. But once we got to this spot right here, which is in May, the middle of May in 2020, we had a buy signal hit. And that was to say, totally stay in the market all the way until we get to the first part of January in 2022. And so that was taking the entire upside and gain right here. Right about this time, though, we started seeing the market get very choppy. And so we came off the high. We started seeing right about here, the S&P and the Dow Jones both started turning yellow. We had a sell signal hit right here. And we stayed in a sell signal, really these short-term buy and sells or short-term positives. And so on that, that's just a general statement. We look for 7 to 10 days of confirmation. So we may not have executed on these trades, but pretty much you're out of the market all the way until we get to right here toward the middle of November 2022. At that point in time, though, we start seeing buy signals start to get longer. So you get a buy, it got a little longer. See how it's shorter right here on the buy to the sell. It's a little bit longer on the buy to the sell, a little bit longer on the buy to the sell, a little longer on the buy to the sell. So we have longer times of confirmation. Those are confirmation signs. And our ultimate buy came right here in March of 2023. And we saw a lot of reallocation happening in that period of time from March through June in your accounts. We got to be, we were not sitting fully invested early on in the year. We got more invested as time went. And then we rode it pretty much all the way up. The summertime, we had a couple blips here in the fall. And that was when Federal Reserve was talking about interest rates not going up as much. But then we started as the last buy ripping higher. And so when you see that, it's kind of like, well, that's interesting. Again, we're not buying at the ultimate lows or selling at the ultimate highs, but it does give us a general indicator of where things are going. Right now, we're still sitting in a buy, and it's actually ripping higher. So we're still looking to be fully invested. But once you start to see at the top here, you start to see the numbers. Let's kind of zoom in a little bit. You start to see more little downdrafts happening. And so this is saying things are getting a little bit dicey. We need to start watching this to say, do we start to sell off? Now, one of the things we really look for is you look here, we start to see momentum from this point here. I'm going to go ahead and draw it out so you can see it. Right here, we have momentum here going down to this point right here. And then at the same time, the exact same time, so momentum is going down. At the exact same time right here, we see the stock market here, and it's going up right here. So we have a period of time where momentum is going down, and yet the stock price is going up. Generally speaking, stock price goes up, momentum goes up, stock price goes up. Momentum goes down from this point right here. See how momentum went down from here to this point here, right? Whenever you see momentum going down, what does this corresponding stock price do? Let's go ahead and draw it out so we can see it more clearly. Momentum went down from here to here. Stock price in those cases also goes from here to here. Stock price goes down. But whenever you see the exact opposite happen, when there's momentum going down, stock price going up, that's called divergence. That tells us we need to be looking out. Every time you see divergence happens, typically the stock market starts to turn. It means we're in a topping pattern, and it starts to turn to start to look toward a sell. So right now, when we see that divergence, we're not doing anything yet. We're just starting to watch to say if an event happens, it could cause the stock market's natural ascent higher to actually turn lower. And so, guys, a lot of movements happening in the market. Just wanted to point out how we're looking at things to be prepared. We actually have some rebalancing going on right now this week. You'll probably get trade confirmations this week. And a lot of it has to do with what we're seeing in this divergence. And so we're starting to take a little bit of profit across the board and be investing in some different areas. And so whenever you see the divergence here, even though this is a Dow Jones, even though we still see a divergence and we're going down in momentum and stock price is higher, it's not as pronounced and we're not as sharp on the upside. So you're starting to see a little bit of repositioning more toward dividend paying stocks. And the other one, a big mover, is a great bellwether, is right here. We have Nvidia, and so when you look at Nvidia, we have this huge run up here in the month of January, and it's up about 10% so far year to date. Phenomenal move up as far as with Nvidia. It's been a story that we've seen really over the last since this point right here hit a sell, hit a buy January of 23, and it went up from 150 up to about 620 where it sits today. So it's one of the things to watch out for. We're watching those lines to see what's happening. It's called price action, and things are moving. Guys, I know there's a lot of information on the chart. I did want to give you a little bit of high-level overview of where we see the markets at right now. That divergence line on the SPY. That divergence line is something to keep your eyes on. If we keep on seeing that, that might cause us to make some change in decisions as far as in portfolios. But right now, everything's still flashing green. Everything's still looking positive. But we're just going to keep on watching as divergence to see if it continues, or do we start to see a bounce back or a little bit of a retrenchment and then move it all the way back up. Guys, I tell you, I really appreciate you. I appreciate all the trust you place in our firm. Information like this, I think, helps you make better decisions. If you have any questions on this, guys, feel free to give me a call. Also, if you have questions about the risk you have in your portfolios, or if you have an individual stock position, or even your 401k, get together with your advisor. Right now, we're actually rolling out some new methods as far as managing in your 401k. We have a very passive strategy with quarterly rebalance that we partner up with a firm that's charging $25 a month, a third-party institutional technical trading firm in which they send you trade signals on your 401k. Phenomenal resource. We're doing actively managed portfolios where we're able to actually debit your Charles Schwab or Fidelity account. And so a way for you to be able to have that actively managed by us with a complete system in which it's DOL compliant and approved. And so it's a phenomenal way to do that. It's the exact same trade signals anyway in there. Anyway, guys, I'll talk to you later. If we see this stuff flash red up here, we'll be sure to let you know. Otherwise, let's keep on investing and making money. Talk to you all later. Bye-bye.